positive development on China-U.S. trade. The two sides have come together on some key issues. What's the current picture and outlook for the future? And new documents reveal how the U.S. government misled the American people about disturbing on-the-ground realities in its 18-year war in Afghanistan. Just how damaging are the Afghan papers, and what's the view from Kabul? Welcome to The Point, an opinion show coming to you live from Beijing. I'm Lu Xin. China and the U.S. converged on trade issues just 2 days before the next round of trade tariffs were supposed to kick in. According to Chinese State Councillor and Foreign Minister Wang Yi, the development demonstrates the spirit of mutual respect and is the outcome of consultation on equal basis, which addresses concerns of both sides. Global stock markets hit a record high on Friday. Business leaders are also welcoming the progress, though some worry it might not be easy to make up for the losses inflicted by the trade war. So where does bilateral trade stand now, and where is it heading? Joining me for the discussion in the Beijing studio is Professor Gong from the University of International Business and Economics, and from Philadelphia, Brandon Blackburn-Dwyer, founder of the consulting firm Grasshopper Strategies. Gentlemen, welcome to The Point. Now let's first take a look at the current status of bilateral trade in the first 11 months of 2019. By the way, we're talking about China's overall foreign trade here. China's overall foreign trade registered steady growth by 2.4% year-on-year. Exports climbed 4.5%, while imports hit or rose by 2.5%. So that's according to the General Administration of Customs, which released the data on Sunday, a week ago. So, Professor Gong, what accounted for the overall steady performance of China?
Well, America's trade accounts for only about like 11% of total China trade, and we are able to make up the loss to the U.S., trade to the U.S. by increasing substantial exports to the European Union. The ASEAN market is rising rapidly, and other countries mostly engage in China's Belt and Road Initiative. We have a lot of investments in these countries, and certainly trade associated with investment also started to increase. So I think we have been able to weather through this very difficult time relatively okay. I think overall China's trade picture is not very much affected, so that's okay with us.
All right. Well, as you said, and I want to break it down more clearly to our viewers, we can see that from January to November, although China's trade with the United States went down by 11%, trade between China and other regions have been expanding, with the EU, for instance, which is China's largest trading partner. Bilateral trade went up by 7.7%. China's trade with ASEAN went up by 13%, and trade with Belt and Road countries rose 10%. So, Brandon, what story are these figures telling us, and what have been the damage done to the U.S. side? Can these damages be repaired easily?
Some of it can. One of the more obvious areas of damage is in agricultural products. China's importing of agricultural products is going to remain consistent on a macro level because China still needs things like soybeans. It still needs these products from somewhere. Historically, they've gotten a large percentage of those from American farmers and from the United States effectively. Now, due to the trade war, China's had to diversify their sources. They've had to go to Latin America to be getting a lot of these products, and there's no real evidence that any of the purchasers out of China that are now finding willing, cooperating suppliers in Latin America would actually have any interest in returning to previous partners in the United States. The trade war's long-term damage is going to be seen with, do these farmers in the United States ever actually recover the customers they've lost to the rest of the world? That's not China's fault. That's just a fact of business. If the price is too high in the United States from tariffs, buyers go somewhere else. Those buyers don't necessarily need to come back unless there's a real reason to come back, and even if the tariffs come back, the United States prices are not that much better than anyone else's.
Well, there was a recent article published by the Foreign Policy which really argues that the trade war has hurt the United States economy more than it did China. Brandon, let me go back to you. Do you think it is still timely that people see facts in this way, or it doesn't matter anymore?
I don't know. I mean, it depends on if you're talking about the people that are actually involved in policy or you're thinking about people that are involved in politics. Policy folks, there's real value to understand the damage being done by the trade war. There's real value in understanding the real impacts of tariffs in our modern economy. The Trump administration has been pushing this line since it came to power that, you know, we live in a post-globalist world where tariffs can be used like they were in the 1910 and 1920s that eventually led to the Great Depression. But they said they'd be effective. You know, if you look at policymakers from the 1990s, they said the tariffs were passé and harmful for the world, and that's where we saw the rise of the WTO. So for policymakers, the damage really will guide the future of our global economy. For politics, the people that like Trump, the people that don't like Trump, don't like Trump. And at this point, this trade war has been going on so long, most of them can't even imagine paying attention to the details of it. All they know is that Trump yells a lot about China. All they know is that some things have become more expensive. All they know is that the economy is doing fairly well outside of the trade war. And so they kind of go, meh. And that's a real problem, because that will encourage the people that I think promote harmful politics and policies like the Trump administration has on trade to just continue to do what they want. As long as the overall stock market is growing, the Trump administration is basically free to do whatever they want.
John? Yes.
Yeah, well, overall, I think other than the farmers getting hurt, I think corporate America, especially corporate America operating in China, are starting to hurt a little bit. I mean, reportedly, the Trump administration cut something around like $50 billion of tariffs. This money has to be paid by someone. I think bulk of it is actually paid by the companies engaged in China-U.S. trade. These are corporate America shipping goods from China to the United States. They're paying these bills. So definitely it's hitting their pockets. So I think, you know, at a political level, the damage to the United States is probably larger than the economic damage. I mean, $130-some billion of exports to China represents a relatively small amount of U.S. GDP. But you know, the farmers is a very important political base for President Trump. They're getting hurt, and it's going to come back to haunt him during the 2020 elections.
And maybe that's why agricultural good purchase has been one of the U.S.'s key concerns. Now, in an interview on Sunday, President Trump's top negotiator, Robert Lighthizer, predicted that under the consensus reached between China and the United States, Chinese purchases of agricultural goods are expected to increase to $40 billion to $50 billion U.S. annually over the next 2 years, and that would roughly double American exports to China by 2021. Now, according to China's official data from 2015 to 2017, China imported about $24 billion U.S. worth of farm products from the U.S. every year, but in 2018, the figure fell nearly 1/3 to $16 billion U.S. So, Professor Gong, how credible are these numbers, 40 and 50 billion U.S. annually, and how realistic is that?
My opinion is that $40 billion of agricultural products imported from U.S. is probably something quite achievable over a period of 2 years. Now, we have to keep in mind that China hasn't bought much soybean for the last year or so. I mean, that can increase very significantly. Other than soybean, I see a lot of hope actually in pork and also in beef. You know, pork, I think there's a very large potential for American farmers, pork farmers, to export to the China market. And beef, in China, the beef consumption, foreign beef consumption, is mostly actually coming from Australia and Argentina. So I think there's a very large potential market for American beef here in China. And if we make that commitment to increase substantially agricultural imports from the United States, I think beef holds a lot of promise.
So at this moment, we do not know yet, because there is still some details and finishing touches to be done there. We do not know whether they will eventually be materialized. But I just want to talk a little bit about the kind of atmosphere, the kind of methodology that has been employed in between the two sides to come to agreement after such a twist and turn, the roller coaster ride that we have experienced. Brandon, how do you think the two sides can better manage their differences under the two systems to talk about, you know, differences in the future? As do you think they will have carved out some kind of more effective way of consulting each other and finding common ground?
On an optimistic level, I think that there has been some significant progress. Let's review some of the positives. One, we're now taking the trade agreement in phases. President Trump wanted some sort of grand deal for the last year. He wanted to be able to, I think, wander around the United States saying that he had done everything that he'd ever promised. And the reality is it's just not how trade works, and that's not how the U.S.-China relationship has worked at any point in time. So moving into a phased approach, very, very smart. Second of all, buried in the details of this sort of somewhat known deal is that there's going to be a dispute mechanism, that we're going to actually have a more formalized, lower-level official forum for both sides, China and the United States, to actually handle some of the ongoing sort of day-to-day type of problems. In the past, there's been reports of those day-to-day type of problems, that the smaller details going awry have actually derailed the larger progress towards talks. So hopefully putting them into a mechanism will help cooperation and engagement. Now, all of that said, I want to point out that, this is the Trump administration. This is the Trump administration that has been working with China to get to a deal that sounds very close to the one we are all celebrating today, no less than 5 times over the last year. We've had various versions of this being prematurely announced in the past, and we haven't actually seen it come to fruition. So while there are more formal moves to create a better basis for communication and relationship building, this is still not the end game. This is still not victory. This is still not something that I'm going to take to the bank and say we're there and ready for.
Okay, well, the situation definitely could be bumpier in the future. I mean, now the Democrat-controlled House of Representatives will vote on the articles of impeachment against President Trump on December the 20th, and President Trump, is likely to face his worst crisis since he took office. Meanwhile, election season is fast approaching. So, John, will there be more twists and turns in bilateral trade and overall relations?
Yeah, well, I totally agree with Brandon, the up and downs we've gone through, but I think, and I'm hopeful that this time is a little bit different. I think, according to China's press release, there are 2 things that are waiting to be done. One is the translation. I think it's translation of the Chinese version. Second has to go through a legal review on this side, I believe. And then they have actually set up a deadline for signing this. That's going to be the first week of December. I'm sorry, first week of next month. So we're still some time away for this thing to be finalized. So I'm going to be hopeful that this time is a bit different, that this is indeed going to be signed. Now, in terms of the overall Sino-U.S. relationship, certainly I think we're getting into a very difficult time now. I mean, look at the one bill after another currently being brewed up in Congress that's not very friendly to China. And certainly you mentioned that President Trump is going to impeachment. And I think that the Congress, the House of Representatives will indeed pass this resolution to impeach him. I think there's no doubt about it in my mind. But whether he will be impeached in the Senate still waits to be seen. And reportedly, that's a very low probability. So I think the bottom line, he's going to be humiliated once in Congress, but then he's going to carry on to his business. I'm more hopeful he's going to be voted out of his office in 2020.
Well, we'll be holding our breath as long as we can. Many thanks to John Gong, Professor of Economics at the University of International Business and Economics, and from Philadelphia, Brandon Blackburn-Dwyer, founder of Grasshopper Strategies.